Craig Parker here, Parker's Property Sourcing. Just coming at you with another video today / presentation talking about the future of renting in the UK. So in this video, we're going to break down the future of the renting in the UK and what it means for property investors like ourselves. Renting at the moment in the UK is no longer a short-term solution for many people. It's becoming a long-term reality for millions of us, to be fair. So in this video presentation, we're just going to go through why it's happening, a little bit of stats, and how investors like myself and yourself can benefit from this. So why renting is growing. Over 20% of the UK households rent now. And this figure has been rising steadily. Younger generations like your millennials, your Gen Zs are increasingly prioritizing flexibility rather than ownership. And on top of that, affordability issues mean buying a home is out of reach for many people in the UK, especially like first-time buyers. This is a combination that makes renting and an easier option for most people. And if you think about it now as well, people can be so much more flexible when renting, especially now in this day and age, a lot of people work from home, and some people can work from different countries now but be based in the UK. So having that element of flexibility, so renting, it just seems more desirable. Which is good for us as investors, as buy-to-let, boring vanilla buy-to-let investors. So the UK rental growth from 2015 to now, basically. Over the past 10 years, UK rents have risen by almost 30%. Yeah. In 2023 and 2024 alone, we've seen record-breaking growth in some areas, hitting 10% year on year. Why is this? Because demand is sky high and the supply is very limited. That old business saying, supply and demand. Buy-to-lets is the perfect analogy for it, to be honest. So the upwards pressure means that landlords can achieve stronger returns compared to 10 years ago, basically. So when we look at supply versus demand imbalance on this slide here, one of the biggest reasons rental prices are rising is because of the imbalance between supply and demand. It's just a fact. Fewer new homes are being built, basically. So there needed to keep up. It needs to keep up with population growth, but it's not, basically. You've got a lot of landlords that are exiting due to your regulations, the higher taxes and stuff like that. But meanwhile, the tenants are still needed, and tenants still need homes, basically. So the demand has never been stronger. And the mismatch that we can see is it pushes rents up, basically, because there's not enough houses for people needing to rent houses or flats or properties, basically. So for us as new age savvy investors, it's a perfect opportunity, to get in. Perfect opportunity. So general shifts. Another trend that's shaping the future of renting is the generational change. You've got your millennials, your Gen Zs. They're not focused on ownership as what the old school people were, to be honest. So that's another good reason to get in, to start investing in boring vanilla buy-to-lets, because the new generation coming up, their main focus isn't I need to buy a house, get a mortgage, settle down. They're a little bit smarter and savvier, so they want to be a bit more fluid and a bit more, free to move as they please. So it delays home ownership. Basically, it really does delay it. Um, so, rise of generation rent. With many expected the rent for 10, 15, or even 20 years, rising house prices, student debt, and life choices like preparing flexibility are fueling this shift. Yeah, this generational shift. This means investors can expect a steady pipeline of long-term rentals. It's really, really, this is like, it's so exciting to me. Like, this is the time because you're looking at the new generation coming through, and their mentality isn't to buy a house to live in. Do you know what I mean? They want to be in these nice looking houses, apartments with brand new kitchen, bathrooms, and showing it on their TikTok. Some of them can't afford to buy it, but they can afford to rent it, you know? And this is where we come into play as investors, basically. So for landlords, this means strong demand in almost every region of the UK. Higher demand often means fewer void periods, which we spoke about before, and a better choice of tenants and higher achievable rents. Yeah. For new investors, it's a great time to enter the market. Yeah. For existing landlords, it's a good opportunity to optimize your portfolio and maximize your returns. So, for both ends of the spectrum, basically, of investors, whether you're a new investor or a seasoned investor, now is a perfect time, you know, to be, expanding on your portfolio. Now is the perfect time. So, what are the risks? What risks can we consider, or do we have to consider as investors? Because of course, there's no investment is risk free. To be fair, and while demand is strong, affordability could eventually cap how much tenants are able to pay, which it's likely. Regulations are also tightening, such as licensing and EPC requirements. So as investors, it's important to be aware of these risks so we can plan and adapt rather than be caught off guard. Yeah, these are some risks that really need to be considered, but it shouldn't be a deterrent to investing in property either. To be honest, regional rental demand. Let's talk about this. So rental demand isn't the same everywhere. In the north of England, you'll find higher return on investments, higher yields, yeah, and strong demand in the north of the UK. That's where I invest. I invest in the south as well, but I also invest heavily in the north, and I can vouch for that. There are higher demand and stronger return on investments up the north for sure, especially from working class families and professionals. And then in the south, the yield tends to be a little bit lower, but your capital growth is, or your capital growth opportunities is stronger. For sure, it's stronger. Um, you got key cities like Manchester, Birmingham, and Leeds consistently showing strong rental demand. So, as an investor, you need to make sure that your strategy is to stay in a certain region, or your strategy works with you depending on what you want to achieve with your property portfolio. So if you just want good, strong yields, then I would say, have a look up in the north. If you want a little bit of consistency and, um, guarantee, then the cities are a good place to invest. And then if you want to just get some really crazy capital growth, down south. And if you want all of the above, then you can look in all the areas. You know what I mean? You don't have to invest in the area that you live in, basically. That's not a rule, because I don't. So you don't have to. And a lot of investors don't, to be fair. So, what's the long-term outlook? Looking ahead, the UK population is projected to keep growing, yeah? Which is, we all know, which is a fact. The housing shortage isn't being fixed quickly enough, meaning demand will stay strong. Yeah, the demand's going to stay strong. Rents are expected to continue to rise steadily over the long term, and for investors, this creates stable environment to build wealth. Yeah. So just to recap what I've just spoke about, because this is important on a long-term outlook. As an investor, you always got to look long-term. Yeah. The UK population is growing. yeah, the rents are rising and housing supply shortage continues, which means that that property that you're looking at or thinking of buying in that area with, you know, high rental demand won't give you any problems in getting a tenant in there because there's a housing shortage right now. So do your part for the community, you know, and buy that house you're thinking of buying or buy that flat that you're thinking of buying. New investors. So for new investors, this is an opportunity to get started with confidence. High rental demand means your first property is less risky because you'll always find tenants. Focus on affordable areas with growth potentials, where both rent and property values are expecting to rise. Yeah? Simple maths, this is. Simple maths. Yeah? Focus on affordable areas with great growth potentials where both rent and property values are expected to rise. And you're onto a win-win. So what does this mean for portfolio landlords? So I would say it's time to scale strategically. You can use your refinances to release some capital to diversify across the different regions. Yeah. So what do I mean by this? So like I've said in previous videos, you can have part of your portfolio that's giving you really good capital growth, yeah, in certain areas that are giving strong capital growth. And then you can have another part of your portfolio that's giving you some really good return on investment in terms of cash flow on a monthly basis. To diversify your portfolio whilst growing it is perfect. So you know that you've got an element of capital growth and, you know, cash flow working together like a cog, basically, in a clock. And it's all just working together and just growing your wealth. Yeah? So that's what it means for portfolio landlords. If you're smart, you know, you'd start refinancing the equity you've got and reinvesting it in capital growth areas and return on investment areas. So just a little recap of the future of renting, yeah, before we wrap up this video. Rental demand will remain strong. Yeah, take it from me. It's gonna get stronger and stronger. Rents are rising faster than inflation is. Yeah, and the housing shortage continues to benefit landlords. Yeah, for both new and experienced investors, this creates an opportunity to build long-term wealth in property. Honestly, now is the time. 10 years ago was the time. 2 years ago was the time. But guess what? Now is the time also. So, if you found this video helpful and insightful, it's a little bit different. So what I try and do on this channel is, you know, I film in my car most times. When things come to me, I'll just do a little video. But this one, I wanted to give you a bit more, you know, content and a bit more facts. And also with a little bit of inspiration that there's no perfect time than now to start. There's no perfect area to invest in, but you just have to do your research and work out what it is you're trying to achieve in your first, second, or third, or 15th investment. Do you want capital growth? Do you want strong return on investment? Do you want both? And then once you work that out, that then will determine what area you can invest in. But there's loads of areas that you can invest in that are going to be a great investment. Take it from me. I've been Craig Parker. Till next time.